Sumit Jalan joins us, Managing Director, Co-Head Investment Banking Business with Credit Suisse, along with SC Tripathi, former Oil Secretary. Mr. Tripathi, good morning. Sumit, good morning. I'm going to start with you, Mr. Tripathi. Easier said than done. Government wants to privatize BPCL. That's what we understand. That is not the formal comment from Government of India or the Oil Ministry. This is a completely source-based information. But if one has to believe that government wants to sell BPCL, do you think it would be a very, very difficult divestment because it's a complicated sector, it's a controlled business, there are labor issues, and again, the oil policy in India is not exactly freewheeling?
Well, the pricing policy has much liberalized. So now there is a better chance of private investment coming in the oil marketing companies. By and large, the prices are market related. But BPCL and HPCL, they were taken over by an act of parliament. So in 2003, when the Vajpayee government were thinking of privatizing, making a strategic sale of HPCL, the matter went to Supreme Court, and Supreme Court directed that the privatization of those companies which were taken over by government through a parliamentary legislation cannot be done only by an executive decision. So BPCL privatization will have this difficulty. Either they pass a legislation or maybe the minimum will be a resolution of the parliament. The other problem in BPCL privatization will be BPCL owns Numaligarh refinery in Assam, which is a product of Assam Accord of 1985. So I think that will not go down very well with the people of Assam. If they want to privatize BPCL, they will have to separate Numaligarh refinery, and then maybe Oil India can take over Numaligarh refinery or Indian Oil, because both of them are operating in Assam and they have linkages, particularly Oil India has linkages with Numaligarh refinery. So that will have to be done. As far as other companies are concerned, each case will have to be taken on merits. Government in the past, last couple of years, came up with an indirect route of exchange traded funds, where they continued to keep control over the companies, but some part of the shares of say about 10 companies were put in a basket, and then they were available for investors like a mutual fund. So that route has, I think, run its course. It is not now very attractive for many more companies left. So maybe for large large scale revenue, they will need to disinvest strategically some of the large companies. As far as the assets are concerned, yes, assets can be privatized, whether it is Power Grid, whether it is GAIL, or even assets of Air India, assets of BSNL, etc. They can be separated and privatized.
So what is the kind of appetite that you're seeing overseas then, Mr. Tripathi, and for these assets? Do you feel that you might see interest from a host of FIIs?
Well, as far as oil marketing is concerned, this is not a very good time, because the world market is seeing a glut. In fact, I am not very confident and optimistic about the government decision to set up a 60 million ton mega refinery with foreign investment in Ratnagiri. So for next 5 to 10 years, yes, the Indian market will continue to grow, and therefore there may be international interest in taking over a refinery company, marketing refinery company like BPCL. But setting up new greenfield projects of mega size, I think need to have a relook. BPCL will find buyers. BPCL is a well-run company. Originally it was Shell when government took over in early 70s, and it continues to be well-run. It has Kochi refinery, it has Bombay refinery, it has Numaligarh refinery, and I think they also put up a new refinery in Bina with Oman investment. So BPCL is a good company. It has a good background, so they will find buyers.
Sumit, want to get you in on the discussion as well. You know, PSU stocks have been buzzing. They've really been the traders' delight, so to speak, of late. What is the sense that you are getting around the noise that is being made around strategic disinvestment, and whether or not it can be a reality anytime soon? Because one knows that this has been long on the government's radar, but hasn't happened quite yet.
Yeah, I guess capital market investors definitely are looking forward to any nature of privatization. We got to remember that some of these assets are almost like family silvers, or if I can use the word family ratans for government. These are great businesses. Some are almost like near monopoly. And in a market context, you don't find too many situations which are of that nature. And however, as Mr. Tripathi commented, that through ETFs and other forms of divestment and supply, some part has been consumed by markets. So market does find that if there is a strategic solution around some of these good assets, the value in the hand of a potential strategic buyer will be significantly higher than wherever the market trades. And therefore, where there is visibility of any of these assets transacting, market is excited about it. Now, you did raise a good question that some of these things have been talked about in past, but the implementation has been a bit of a challenge, and Mr. Tripathi highlighted some of the nuances. So I think the timing, the timeliness, as well as, to my mind, the certainty of the process and whether or not it can happen will decide how market will look at these opportunities in a slightly nearer term perspective.
What about, some of these PSU assets do have solid market share, Sumit, from coal, oil, copper. If we take a look at some of these segments, do you think that a complete control of some of these assets would be desirable from an MNC player, let's say, in some of these sectors if they're looking to enter?
So it's a good question. I think it needs to be dissected between what we call, like, let's say, dominant market share stroke virtual monopoly. Those kinds of assets, if they have been run in a manner or can be run in a manner which is economically profitable and not necessarily socially profitable, I think that will find a lot of takers from the MNC world.
Mr. Tripathi, if I just take the clock back and talk about the real disinvestment which has happened, I'm talking the real disinvestment, not morph disinvestment where IBP was merged by IOC. Frankly, nothing big has happened in the last 20 years. BSNL was privatized. They failed to privatize Air India. BSNL, we don't know where it is headed. By minor tinkering of some mines and some non-core assets, in last 20 years, nothing can be called as a very big disinvestment. Would you agree with my assessment?
I was the last CMD of Balco, which was the last major disinvestment. Last, government CMD of Balco. And we ran through the process of disinvestment in the year 2000, 2001. I think in February 2001, we disinvested. 51% was sold. So I was also working in the Ministry of Mines at the same time when Hindustan Zinc was disinvested. The process has many hurdles, but if there is a will, strong will, and the management also works towards the disinvestment. Sometimes the management does not work towards the disinvestment and therefore creates problems also, hurdles in the process. If the management works towards disinvestment, then some of these cases can be taken up for disinvestment. And the political will is important. Why I say 2000, 2001, it did not happen in 2003 because then the government had only 1 year left. Similarly, if the disinvestment and particularly strategic disinvestment is to be taken up, then this is the time. In the first 2 years of a new government, only perhaps they can have enough strong political will to go through the tortuous process of disinvestment, because at every level there will be hurdles. So therefore, this is the time to go ahead. If they miss the bus in this year and the next, then I think it will not be very feasible.
Comments from you, Mr. Tripathi, which to your mind are the low-hanging fruits which can be plucked very easily on the disinvestment front?
Well, you mentioned Shipping Corporation. I think Shipping Corporation is a good case, and there are a large number of other smaller companies, Scooter India and various other companies, Hindustan Copper for that matter. Zinc disinvestment, many people say, was not appropriate because Hindustan Zinc had nearly 95% share of the Indian market. Indian market meaning Indian production. But even zinc at that point of time was disinvested. So copper is important, but Hindustan Copper has not been a very efficient company. Hindustan Copper can be disinvested. In fact, both Balco and Hindustan Zinc now are doing much better than what they were doing 20 years ago when they were in government hands. So these are, you see, you have to educate the people, you have to educate the other stakeholders, the state government, the labor, the management, etc., that the more efficient running of these companies is in everyone's interest, and more efficient running can be only shown through examples. So these things have to be taken to public, also taken to state government. I remember both in Hindustan Zinc and Balco, there was a lot of problem from state government also, besides labor and the local management. And of course, the matters went to the court also. Finally, the Supreme Court gave a decision that it was for the government to sell its property. But the process has to be transparent, and the people have faith that it has gone through a transparent process.
We'll have to leave it there. Thanks so much for joining us. We would have liked to continue the conversation, but we also have the Steel Secretary waiting. Thank you, gentlemen, for being with us.